Yeah, so I've been talking to clients about what I've been calling the monster under the bed. And it just seems like there's this air of doom and caution that something's bound to happen. There's a monster under the bed. The stock market can't keep going up like this. And it's been like this for 10 years. After the financial crisis, everyone was so spooked that they're looking over their shoulders. They're worried, hey, I can't or don't want to take that kind of a hit. I don't want to go through that thing again.
Yep.
Even though ironically it was a great opportunity. It's not fun. So everybody's been very cautious and worried that something's going to stop this market.
Another shoe's going to drop somewhere.
Yeah, another shoe's going to drop. And I personally kind of like that when that's the mood, because how do I put it? If everybody was positive, then there's no more buyers left.
That's
and
right.
The market will go down.
Yep.
So you need a few doubters,
Yep.
and not too many, because then you have a panic. But so, I personally don't think there's a monster under the bed. I think there's a whole mess of them under the bed,
Yep.
a whole bunch of them. They're just sleeping. And it's the U.S. debt crisis. I say crisis, it's a problem. There is the student loan issue.
Yep.
There's the inequality problem. There is underfunded pensions all over in municipalities. There's a whole slew of monsters under the bed. And they're going to wake up at one point.
Yep.
It doesn't mean you don't invest. People have been waiting for the U.S. debt to be a problem for 30. I've been in the business 33 years, and it's always been on the top of everybody's mind. So every decade we try to predict what we call the big mistake. In the 90s, it was the dot-coms. We had a lot of worries at that time about those stocks. In 2005, we said we're going to go on record and say that the real estate issue is going to be a big problem.
Yep.
It was even bigger than we thought. And then, I think it was 5 years ago, we said, we wrote it up in our newsletter, that what is the big mistake for this decade? And I said the big mistake is probably looking for a big mistake, because I don't see one imminent. And we've got 6 months to go, and that prediction will be correct if we don't go off a cliff in 6 months. But the next decade, I'm afraid we're going to get some of the monsters under the bed to come out.
And it does seem like the debt issue is going to be the big one. The part of this market, as you know, has been fueled by stock buybacks.
Right.
And companies are borrowing massive amounts of money to buy back their stock. There's been some discussion out there that a lot of companies' credit ratings, if it weren't for the economy being perfect right now, a lot of their credit ratings would be downgraded.
Because they borrowed so much to buy their own stock.
That's exactly right.
And if that demand goes away.
But the point is, as you were saying, with all the stuff in the past, where you've been able to project out what that monster is going to be, so to speak.
Right.
Sometimes it can go 3 or 4 or 5 years before it rears its ugly head.
That's why we have a whole decade to predict it, so we don't have to get too cute with the timetable.
I always go back to, and I've talked to a number of clients about this, back in the tech bubble.
Right.
Everybody remembers Alan Greenspan's irrational exuberance speech.
Right.
And they think that he made that speech right about when the bubble peaked.
Right.
And in fact, he made that speech 4 years before technology stocks started going down. So
after he made the warning, stocks went to the stratosphere.
That's exactly
further
right. And the same thing with housing. We talked about housing in our newsletter. There were a lot of places.
2 years earlier.
You were seeing, conversations about housing. I think one of the analysts we followed wrote a great piece on the number of real estate professionals that were coming on board in California.
Yes.
Because that was becoming the easiest profession to get rich in.
That was a great chart, and I still have it.
And now that, of course, blew up.
It was like 5,000 real estate agents normally apply.
Yep.
And it jumped to 20,000. Everybody wanted to be a real estate agent.
Yeah.
He said if nothing else tells you that we're near the end, that was it.
Yeah, that's exactly right.
So,
but again, that chart came out probably 1.5 to 2 years before real estate started to be recognized as an issue in the economy.
Right.
You know.
So we say now, what what is the spark that makes this debt issue finally come home to roost? We don't know what it is.
You don't know. You never know what the spark's going to be.
There's one more issue too. Another one is that, mistake-wise, that I see, it might be an easier call, but maybe not, is that the stock market is being pushed along by fewer and fewer names. It's a bunch of the giant tech companies, which are having a little trouble now because the government's got some antitrust issues with them, and a few of the blue chip companies. Everything else seems to be going by the wayside. The steel stocks have been destroyed. The oil stocks have been terrible. Financials have done nothing. Even some of the techs, semiconductors have been destroyed. You're talking 50, 60% down. China stocks have been hit. All of emerging markets. So there's fewer and fewer things working, and that usually spells trouble.
That's right.
So one thing we've been doing is, I hate to do it, I love my tech stocks, but some of them we've been selling.
Yeah.
Even our, prized possessions.
Yeah.
Trimming some, I should say.
Yeah.
And then waiting to buy some of these really beat up issues.
Yeah.